Quantitative easing is back, baby. The Federal Reserve announced a 25 basis point cut yesterday, and that brings the federal funds rate down to 3.5 to 3.75%. The vote had 3 dissenters. 2 people, they thought we should have left rates exactly where they were, completely unchanged. But Fed Governor Stephen Myron, he's holding in there tough. He wanted a 50 basis point cut. Now, while the interest rate cut is important, and people are going to talk about it, it was a consensus. Everyone across Wall Street thought that the central bank was going to reduce the cost of capital by 25 basis points. That's what they did. The big surprise, though, coming out of that 2-day meeting, was that the Feds announced now that they are going to restart balance sheet expansion. They're going to do $40 billion in monthly Treasury bill buys. QE's back, baby. My friends at Geiger Capital put it best. They reminded us that Ben Bernanke, he promised in 2008, QE was temporary and the Fed's balance sheet, it would soon be lower than when they started. Wrong. Let's take a look at this chart right here. As you can see, the Fed's balance sheet has continued to grow over time. And now Jerome Powell's telling us that it's time to go back higher on the balance sheet and higher in asset prices. This entire situation is highly unusual. Creative Planning's Charlie Bolello, he outlines it, and he says that stocks, all-time high, home prices, all-time high, gold, all-time high, money supply, all-time high, national debt, all-time high, CPI inflation, 4% a year since January 2020, 2 times the Fed's target, and the Fed, they cut rates again, and they'll start QE on Friday. But as I wrote earlier this week, multiple deflationary forces are headed for a collision with the U.S. economy. We've got AI, robotics, tariffs, and a surge in deportations. Each would be worth watching on their own, but they collectively create the perfect storm for the Fed to fail at monetary policy. If you add in the weakness in the job market, and it becomes clear why the Fed has to get interest rates lower. Frankly, they're not doing enough yet. So now that we know QE's coming back, and it's going to be fun, what will happen to asset prices?